Welcome back, everyone. This is Carlos from Omegavus Trend in the Forecast Mastery program. So here's a quick rundown of expectancy for the market. Today is November 3rd, 2025. So we just want to give the chance for the market to acclimate to the overnight sessions as well as the European sessions as the market opened. And the market basically has been on a massive upward movement, right? So if we pay close attention to what can we see of the market is a massive bullish upward. I'm on a 4-hour chart, by the way. And the market just left behind a gap they haven't been able to fill yet. Okay, so I'm still gravitating towards the fact that they should at least come back and fill that gap, and it is not happening yet. So we'll see about that throughout the process of the session. But we're going to break it down step by step to see how close are we to potentially look for a potential short position, which what I'm going to be looking for today. All right, so the market just opened up today, and it just created kind of a double top formation, but I'm going to break the whole thing up. Bullish outlook based on the pattern recognition of a Elliott wave pattern. This is an impulse move. A, B, C structure. This doesn't count as a C structure because this low must be lower than the previous low below to actually account for a corrective mode wave count, or Elliott wave 2 or Elliott wave 4, if you kind of follow that lead. So again, I'm not a big advocate of Elliott wave patterns, but I need to know if they are either an impulsive or corrective mode. And the way that I'm seeing here so far, the market hasn't broken the previous high, which indicates we're still in an active corrective mode, indicating that most likely their intentions might be. I'm not saying this is going to happen, but it looks like they're still hesitating to continue higher and possibly continuing potentially into closing this gap. So again, that's at least the game plan that I'm after. All right, now that I see that and I got clarity, on a 4-hour chart, I'm on a 4-hour chart right now. If we zoom in, this is the zones. Write it down. 26,183, 26,359, big, huge zones on the big time frames. And for me, this conglomerate is huge. If you notice here, the price structure that happens, right, last week, Thursday, Friday, this is insane, right? This is definitely a very difficult market to deal with, and it just created this big zone. Again, 26,183, 26,359, resistance zone. Support zone that spans between 25,971 all the way to the bottom of the 25,851. And I will debate to extend it possibly to the 25,795, because we just unveiled today a massive supporting zone with slingshots at 818 and 795. So, and if you pay attention, this kind of makes sense in terms of the the distance of the ranges from the top and the bottom based on order flows. Okay, so anyway, that doesn't mean that we can't play the game. I'm just saying make clear assumptions that as the market progress and start hitting potentially below the previous day close at 25,971 at any given moment, the market has shown massive participation from buyers, pushing the market further higher, not allowing it to go any further downwards. Okay, so a lot of support just being taken starting at the 25,971. So if you become a short seller, right, or a sell setup enthusiast at that point, rest assured to understand you're going to be encountering a lot of buying pressure against you. Okay, that's it. If you want to bypass the fact of understanding and seeing clearly how much of a strength the buyers will be creating in this area, that's what the OT is all about, which will help you tremendously identify when the buyers start hitting in. And as a mean of a reminder, remember, for those of you trading using the OT from M1 to M15 is short-term momentum bias, right? So this is a quick indicative of what's going on right now at this moment in a short-term bias. And M32, the bigger time frames of daily, it becomes clearly that it's going to be a push through to the buyer ground, right? To the bigger push to the upside. I noticed that the VIX has been mostly negative, but dying out, right? Basically unbiased. They're not in, like in this mode of the RTY, 260% strong and whatnot. But it's not on the negative 3 digits, nor positive 3 digits, indicating unbiased market, very unstable. There is no volatility moving the markets today. Easy, it's just pretty easy to see it coming back and forth. But if you notice here, it's pushing a little bit into the negative side, but look at the NQ. It's also pushing on the negative side. It doesn't match up, right? When you go calculus and minus equals, cancel. So basically in this point, you can understand that this is basically canceling each other out. It's just not going anywhere. The grayed out color, it's unbiased, you can tell. And if you want to see something trending, you look at the euro dollar futures, right? Currency futures right here, right? So basically strong bearish opponent, and this is clearly understanding I should be selling out of everything that I have in front of me, right? Based on what I follow, this is the market participating, and that would be only looking for short position, perhaps even the British pound. Hope that kind of makes sense. It's just simplified. That's one of the key factors of the OT that helps you identify where to focus in. And if you're kind of I used to be part of that one of those. If you're part of one of specialists that you only want to be focused only on one thing, correct me if I'm wrong, you end up forcing trades where there shouldn't be any trades because you think you know it all, right? So it is very imperative and important for you to understand that there are capabilities for you to scan the market and say, I should not be trading today whatsoever in any market as of right now at 2:49 in the afternoon, right? If you scanned, there's nothing happening. Perhaps maybe Russell might be looking for some sign of potential long positions right there, but it's mixed out by the big picture, so I'm not expecting a big move right in there. Not willing to, is it not worth participating in it? However, here it is. Here's a winner one, right? So there you go. And this is for me to explain to you basically how do you can take this tool to focus, help you focus where to put all your efforts in. If I would be trading equities, Amazon would be the buying sequence at this point, right? And Riot. There you go. So that's a quick crash course on the simplification of how to use the OT for selection and validation of the market that you should be focusing on that provides you the highest probabilities of success based on probabilities, period. There's nothing else to it. The next step, it will be correlation. As I explained, I see the VIX unbiased, so there's no correlation. The momentum is not moving anywhere, so it's dead, which indicates that if I say, okay, there's no volatility into the market, I can take advantage of short-term bursts into the market. And I notice the NQ is a little bit weak. It's weaker in the middle point of the bigger time frames. The biggest time frames right here, daily, whatever, they're not as strong, right? And 480, I don't use that much, but the other ones are not as strong. And M20, M60 are unbiased, which indicates sellers might be taking control as we speak, right? And the VIX is unbiased, very dead, but slightly positive. So that means that I can probably become a short-term scalper on the sell side on the indices, specifically the Nasdaq, and so on and so forth. ES, I use it as a leading indicator based on correlation, and it's going nowhere, which indicates, again, there is absolutely nothing to do in this market whatsoever. And if you pay close attention, that actually match up the fact that we're caught up in this big, huge range. Is this starting to make sense, guys? So again, there's no FOMO, no ambiguity, no confusion. It's pure clarity. Market is trapped between a big zone of supports and buyers and sellers. OT, there's no correlation between the indices and the VIX, right? There's no momentum going on whatsoever. And it's unbiased either way. So there's no correlation. And on top of that, there's no momentum or pressure, slightly bearish, which match up my overall view of saying, hey, they might be possibly still thinking, sitting aside to potentially going out and close this gap whenever they decide to move and break barriers as we see it here. Now, if we want to take this in a simplified format, all right, I can break this down as follows. And this is me just explaining to you because I'm on a 4-hour chart. And if we break this down, because I know there's not going to be, I'm going to leave a lot of on the table by just waiting. That would be the bypass, right, of being more in the conservative side by waiting for the market to be on the right side of things and have some clarity. But at the same time, if I want some action, I can say, okay, so here's the conglomerate of one power zone, and there is a big white space until the next zone, which is another power zone, and that is over 91 point of opportunity. You know what? Instead of me thinking, all right, so I know this could be a big, huge zone, I can just dial it down on like such, and I can tell that when the market breaks in that white space, you see how they run and bounce back up. They're running to continue down. It could give me the opportunity, if I'm quick enough and I validate everything enough, to get anywhere from 60 to perhaps 90, maybe even 100 points. So this could be the window of opportunity for us to capitalize on that. I really hope that can make sense. And the same thing applies today, right? As the market just move along and just start moving along. So the market sold off, but failed to hit even the zone, but it moved about 130 points, right? Good enough for short-term scalpers, if you will. The same thing will apply on the top side. If you want to break this down in stages, if you will, right? That would be one microzone. You see how they went into the other zone and reverted back, went into the other zone and reverted back. So that's exactly what they're doing. And you can just say, okay, so the white space that I can see is good enough for 50, 60 points. Not bad. I can get, 15, 20 out of that and call it a day. Does that make sense? And then if they move past above and beyond that, the next encounter of resistance is going to be 75 points just above that zone. But if you account from the beginnings of it, right, you could be talking about between a 50 to 160 point potential in the upward region of the movement. But I notice here that every time that the market went into the high ground, you can see it right here, market rejected, came back down, try to break free above that level of the 26,285, failed to go for it. They try to go at it again, failed at the 272 mark. They try once again for the third time, 272 mark, failed. And this is kind of a triple top formation, right? I'm not saying that it is a reversal we should shorting, because again, I haven't said that, and I'll be the first one to say don't even think about it, right? I want you to pay close attention to the fact of the playgrounds where you're at. And depending on the style of trading that you have pockets inside of those zones that you can call mini playgrounds, and be very diligent and quick and agile to make ins and outs accordingly. And it all helps out when you have the map in front of you, which are the one that I'm giving to you right now. How will I play this? In my opinion, since I'm swing trading, right, most recently, I will rather wait for the market to break free at least, let me put it this way, from this zone. I will adjust it for my taste like such. A clean break about 285, I will consider myself a potential buyer and try to grab those 20, 40 points and hopefully break even and let it rip to new high grounds. But it doesn't play it out, right? Maybe a clean break between 25,949, and I'm gonna have a quick sell setup underneath, right, on this region, on this area, and just tied up, right, the stops accordingly as I see and approach a power level or power support zone as have it laid out in here. If they clean break below that level, then the target would be 25,736. And if they do, then they're going to be filling this gap over here, which is my goal all along. But in a nutshell, I can see the market just pull back, left behind a swing low, high, low. This low did not took the previous low. That's a bullish intent. High, low. This low did not took this most recent swing low. That's again a bullish intent. But I just need to wait for the market to show itself first and then take control in a directional phase. I can do a trend line formation like such. This is old school stuff, but it's all worth it, right? The more, the merrier of confirmation. So we have a wedge. And now that pattern makes a lot of logic, don't you think? And now that we have this clarity of understanding, all right, we're against this sell zone, against these buy zones area. It's cut up in a wedge. There's absolutely ambiguity on the market. Look what's going on the OT. I didn't have to do all this drill down analysis to pinpoint. Well, it works. It works because I have pinpoints level and clarification. But I didn't have to draw the triangle and the whole thing by just looking at here between these three and understand that the market is completely biased. I should not be participating in it. Period. Very simple. In one simple glance, I can say market shitty, stay away, no trades today. Moving along. Okay, so this is kind of in a nutshell where I'm at this point. Once we break above those levels, again, the only target that I have as we speak, let me see if I can just do this pretty quick. Okay, so the only two targets that I have upwards are the 26,359, and I'm talking a break above the 285. Remember, if I want to be more patient and wait for massive confirmation, I'll wait for the 359. So the target would have been the 359 towards the 349. Pretty decent, right? Almost, I don't know, 200 points. Let's measure that. Yeah, 180 something. Good enough. But in the meantime, sideways, no trades, standing out, no trade whatsoever. I got to wait for the market to show itself first, and then I'll come back to it. If we pay attention to the reports, right? Today we had high input reports coming in, didn't move much the needle. FOMC speaking engagement, more FOMC speaking engagement, so not much happening. Now, Joe openings happening tomorrow, right? So might do some trick, but most importantly, the trade balance. This right here, it is something that even though that they label it as low, it tends to show a lot of reaction into the market. So we'll take in consideration tomorrow 8:30 to 10 and find some clarity exactly to where is it that they want to go. To clarify it and close, if I go to a daily chart, right, I would be for swing trading, for the swing trading type of things, if you pay close attention to this bar right here, this bar in the middle right there, that bar represents an outside bearish bar, indicating that the market should continue further downwards, right? That is in terms of pattern of behavior. That's all I'm trying to say. And it makes sense that the market is just reverted back down, outside bearish bar. They should move further downwards. It's pulling back up. It's holding in the synergy zone. You see that it's more clear at this in this time frame of daily, and a clean break of the prior swing low that validates the bottom of the zone of 790 will dictate that the continuation to close the gap and perhaps continuing down to the 25,410, 24,938 could be a possibility. Okay, so that's the reason I have to be patient, and I don't see this as a bullish outlook or intent yet. So it's not getting my attention as a buyer. I'm a little bit more inclined into the sell side of things. And quite honestly, in this clear bar, if they close today here and tomorrow we see a clean break below that level, including the 25,949, I might be willing to go short on maybe 2 micros or 3 the most, and add up another one when I see the clean break below, right? But that's pretty much it. So that is for the Nasdaq and the ES. Unfortunately, I did it on the ES, not on the micro, so it is what it is. Let me drop down to a 4-hour chart, and this is a zone for you. And I'm not going to waste the time explaining the whole shenanigans here, but it is cut up between 69.12 and 68.48. That's a big, huge range, right? Or what we call the no trade zone. And notice the market is massively choppy, right? It's a huge choppy zone. We're cut up right in the middle of a slingshot that happens as a target that we've been holding for weeks. On the up until last week, that broke above that level, came back, tested it, and now basically notice they're trying to close below that level, and this is a 4-hour chart, and they haven't closed it until early in the morning. Okay, so that is really powerful, right? That was Friday early in the morning, and basically that's the intention of the market moving down. But they have created so far at the bottom 1, 2, 3 bottom formation right on a massive support zone, so it's holding steady again, which means we should not be tempering with this market until they gain some clarification. A clean break of 69.12 will indicate a resumption for the market to try to test the rotations at the top of 69.40, 69.48, with a clean target of 69.82 as of today. Obviously, as the market progresses and start moving higher, I will have more data based on order flows and whatnot, and I can just pinpoint very specific targets accordingly. A clean break of 68.48 will go into support zone number 2, but pay close attention. If I take this zone right here and put it back, it also overlaps almost 50% of the gap which they already filled, which means the prophecy of filling the gap happened on the ES but not on the Nasdaq. Interesting. And the ES tends to be typically the leading indicator of the pack. So we'll see about the fact that if this guys right here filled the gap completely, you see in this bar right here, they filled it up all the way through, and they're trying to push further higher, but they are not being able to be successful at it. If they clear off these zones and start moving higher, E and Q might be following suit. Okay, that's all there is to it. Again, caught up in the no trade zone, 69.12 between 68.48. Unbiased, no trade, stay outside. Wait for the market to show some clarity. Targets to the upside beyond 69.12, 69.30, 69.38, 69.82. And I'm putting round numbers, not using decimal points to make it easier for everyone. A clean break below 68.48 will indicate a target at 68.34, 68.26, 68.6, 68.06, and 67.94. Okay, those are major targets on the way down, including a swing level at 67.47 on the E-mini S&Ps, which is the same thing for the micros. With that being said, this is for the forecast for today. Let me know what you think about it. Put the comments below. If you want me to do and drill down a very specific market, just share it below and I'll look at it. And by the next video and follow-up video, we'll include that new forecast level for you. If you haven't done so, might be a link below. You can join one of our beta test groups. We're testing a school group. Again, this is just me testing. I'm not saying we're going to keep it running. And we're running a test group to see if we can revive our 13 in a run previous trade room that we closed successfully. Just to take a little bit of a break, and we're probably going to be reviving it coming back. But if you are a professional trader and you specifically trade the minis, not the micros, mini S&P, you will get the best bang for your buck, guaranteed, as that's what we specialize with our clients, right? And if you got any questions, again, you can schedule a call. There's nothing else to it. Just we can have a chat and I can try to help you in any way possible. With that being said, this is Carlos and I'll see you in the next forecast video.